Hello, my name is June Collier, Executive Vice President with My Econ. In this video, we're going to talk about increasing your cash flow via withholding. Now, one of the quickest and easiest ways for most associates to increase their cash flow is to adjust their W-4. Adjusting your W-4 can provide immediate cash flow for investing, debt elimination, or lifestyle. You can make the changes to your W-4 using the paper form or by using the IRS's electronic withholding calculator on the IRS website. Watching this entire video on completing the W-4 before you attempt to complete the form may be beneficial. Read the form, fill in the required info, and turn it into your employer's HR department. If you need help, ask your upline EVP or your personal tax professional. Now, just putting 10 or exempt on the W-4 is not wise or legal. The main objective is to break even with the IRS at the end of each tax year. Let's now take a look at how to complete the Form W-4. The Form W-4 is an IRS form you complete to let your employer know how much money to withhold from your paycheck for federal taxes. Accurately completing your Form W-4 can ensure you don't have a big balance due at tax time. It can also prevent you from overpaying your taxes, putting more money in your pocket during the year. The Form W-4 is based on the idea of allowances. The more allowances you claim, the less money your employer will withhold for taxes. The IRS states that over 80% of taxpayers have too much money withheld from their paychecks. In this training, you will learn how to properly complete your Form W-4 so that you get back money that you may possibly be overpaying on a monthly basis. Let's first take a look at the purpose of the W-4. Purpose: complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. Consider completing a new Form W-4 each year and when your personal or financial situation changes. What this is saying is that it is your responsibility to completely fill out this form so that your employer can take out the correct amount of taxes from your pay. It is also saying that you should review your Form W-4 at least once a year, and you have the right to change this form anytime your financial situation changes. This is a big reason why most people are overpaying in taxes. They completed this form when they first started their job and have not looked at this form since then. Imagine if they had been on their jobs 10 years. Do you think they have had some financial changes in their life? Absolutely. Let's scroll down to the Personal Allowances worksheet. Form W-4 is also known as Employees Withholding Allowance Certificate and includes a series of worksheets you can use to calculate the appropriate number of allowances to claim. Let's go through each line on this worksheet to determine how our calculations will work. We will use an imaginary person to calculate the allowances. Susan is a single mother with 2 children. Susan has one job and earns $65,000 per year and spends $4,800 a year in daycare. Susan recently decided to start a home-based business in My Econ. Line A. Enter 1 for yourself if no one else can claim you as a dependent. Susan enters 1. Line B. Enter 1 if you are single and have only one job, or you are married, have only one job, and your spouse does not work, or your wages from a second job, or your spouse's wages, or total of both, are $1,500 or less. Susan is single with one job. Susan enters 1. Line C. Enter 1 for your spouse, but you may choose to enter 0 if you are married and have either a working spouse or more than one job. Entering 0 may help you avoid having too little tax withheld. Susan is single, so Susan enters 0. Now, had Susan been married, she would have had the choice to enter 0 or 1. How does she decide? We always believe in getting your allowances if you have the option to take them. which you do in this case. However, if you are in question, the document states to enter 0 to avoid having too little taxes withheld. If last year you received a refund back from the IRS, you did not have too little withheld. You had too much, so you would enter 1. Line D. Enter the number of dependents, other than your spouse or yourself, you will claim on your tax return. Susan has 2 dependents. Susan enters 2. Line E. Enter 1 if you will file as head of household on your tax return. See conditions on the head of household above. Let's look at the conditions of head of household to see if Susan can claim head of household. Head of household. Generally, you can claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. See Publication 501, Exemptions, Standard Deduction, and Filing Information for information. Susan is single and she pays more than 50% of the cost of keeping a home for herself and her 2 dependent children. Susan can claim head of household. Susan enters 1 on line E. A person who is married, separated, not divorced, and who does not pay more than 50% of the cost of keeping up a home for themselves and their dependent cannot claim head of household. This includes individuals paying child support. Line F. Enter 1 if you have at least $2,000 of child or dependent care expenses for which you plan to claim a credit. Note, do not include child support payments. See Publication 503, Child and Dependent Care Expenses for details. Susan pays $4,800 in child care. Susan enters 1 on line F. Line G. Child tax credit, including additional child tax credit. See Publication 972, Child Tax Credit, for more information. If your total income will be less than $70,000, $100,000 if married, enter 2 for each eligible child, then less 1 if you have 2 to 4 eligible children, or less 2 if you have 5 or more eligible children. Susan is single and earns $65,000. She has 2 children, so she gets 2 for each child. 2 times 2 is 4. Because Susan has 2 eligible children, she has to subtract 1 from 4, which leaves her with 3. Susan enters 3 on line G. If Susan were married or earned more income, she still might be eligible for a child tax credit allowance. It's just it would not be as much. Line H. Add lines A through G and enter the total here. Note, this may be different from the number of exemptions you claim on your tax return. Susan adds lines A through G and comes up with 9. Susan enters 9 on line H. Notice the difference between allowances and exemptions. On Susan's tax return, she will only be able to list herself and 2 children as exemptions. That's a total of 3. However, on her Form W4, she qualifies for 9 allowances. Another reason many taxpayers overpay in taxes is because they do not read this form and instead list their exemptions instead of allowances. The paragraph below line H states, if you plan to itemize or claim adjustments to income and want to reduce your withholding, see the deduction and adjustment worksheet on page 2. If you are single and have more than 1 job, or are married and you and your spouse both work and the combined earnings from all jobs exceed $50,000, $20,000 if married, see the 2 earners multiple jobs worksheet on page 2 to avoid having too little tax withheld. If neither of the above situation applies, stop here and enter the number from line H on line 5 of Form W4 below. Susan is single with 1 job and will take the standard deduction instead of itemizing. In most cases, she would stop here and claim 9 on line 5 of the Form W4. However, because Susan decided to start a business with MyEcon, Susan now has the option to claim adjustments. Let's take a look at page 2 of the Form W4. At the top section, we find the Deductions and Adjustment worksheet. There's a note that reads, "Use this worksheet only if you plan to itemize deductions or claim certain credits or adjustments to income." Susan has started a business with My Econ, so she plans to claim adjustments to income based on the business expense deductions she plans to claim in her business. Line 1 reads, "Enter an estimate of your 2017 itemized deductions. These include qualifying home mortgage interest, charitable contributions, state and local taxes, medical expenses in excess of 10% of your income, and miscellaneous deductions. For 2017, you may have to reduce your itemized deductions if your income is over $313,800 and you're married filing jointly, or you're a qualifying widow. $287,650 if you are head of household. $261,500 if you're single, not head of household, and not a qualifying widow, or $156,900 if you're married filing separately." See publication 505 for details. Susan does not plan to itemize deductions, so she will put a 0 here. However, if Susan had itemized in her previous years, she could get her last year's tax return and look at Schedule A and enter the total itemized deductions found on line 29 of Schedule A. Let's look at line 2. Enter $12,700 if married filing jointly or qualifying widower, $9,350 if head of household, $6,350 if single or married filing separately. Susan is filing head of household, so she enters $9,350. Line 3. Subtract line 2 from line 1. If 0 or less, enter 0. Since line 1 is 0, if you subtract 9,350, you will get a negative number, negative 9,350. Since this is less than 0, Susan will enter 0. Line 4. Enter an estimate of your 2017 adjustments to income and any additional standard deduction. See publication 505. This is where Susan will enter adjustments to income based on business expenses she expects to incur for being in business. Because this is Susan's first year in business, we're going to make a conservative estimate of $4,050. Susan will enter $4,050. As Susan begins to track her expenses, she can always come back and adjust this number if $4,050 is too conservative of a number. As of year 2017, every $4,050 allows you one additional allowance. Line 5. Add lines 3 and 4 and enter the total. 0 plus 4,050 equals 4,050. Susan enters 4,050. Line 6. Enter an estimate of your 2017 non-wage income, such as dividends or interest. Susan does not have any investments that will pay her dividends or interest, so she enters 0. Line 7. Subtract line 6 from line 5. If 0 or less, enter 0. 4,050 minus 0 equals 4,050. Susan enters 4,050. Line 8. Divide the amount on line 7 by 4,050 and enter the results here. Drop any fractions. 4,050 divided by 4,050 equals 1. Susan enters 1 on line 8. Line 9. Enter the number from the Personal Allowances worksheet, line H, page 1. Susan goes to the front of the page and looks at line H and sees the number 9. Susan puts 9 on line 9. Line 10. Add lines 8 and 9 and enter the total here. If you plan to use the Two Earners Multiple Jobs worksheet, also enter this total on line 1 below. Otherwise, stop here and enter this total on Form W4, line 5, page 1. Line 8 plus line 9 equals 10. Susan does not plan to use the two earners multiple jobs worksheet, so she puts 10 on line 5 of page 1. Next, Susan fills out all of her contact information and separates the bottom portion and turns the employee withholding allowance certificate into her HR or Human Resources department. Some companies today now offer the ability to update your allowances online via a company HR portal. The objective to properly completing your Form W4 is to not owe the IRS at the end of the year, and not to have the IRS owe you. If you are part of the 80% of taxpayers who have been getting back a refund, you can now get back cash on a monthly basis and use that cash to start helping you build personal financial success. This money can be used to pay off debt or fund your retirement account, or maybe you just need the money for your lifestyle. Either way, it's your money. Complete your Form W4, and I wish you the best.